Welcome everyone to this episode of Mines and Money 5 at 5 on the road to IMARC, sponsored by Peak Asset Management. My name is Kimberly White and I'm one of the team members of IMARC and Mines and Money. I would like to start by acknowledging the traditional custodians of the land throughout Australia and their connections to land, sea and community. I live and work on the land of the Bunurong people of the Kulin Nation, and I pay my respects to elders past and present, and extend that respect to all Aboriginal and Torres Strait Islander peoples who are here today. In this session, we will hear from each mining company in turn, who will then take questions from our investor panel and the audience. Any participant may ask a question using the Q&A function at the bottom of the screen, and if you see a question that you like, you can vote for it so it gets pushed up to the top. I'd now like to introduce you to our host for this episode, Niv Dagan, founder and executive director of Peak Asset Management. Over to you, Niv.
Kim, thanks very much for the introduction, and for those listening, it's great to see you. Fantastic panel we've got with Campbell, Olsen from Arete Capital, John Forwood from Lowell Resources, and Richard Morrow from Ordminet, and a terrific number of companies. For those who don't know Peak, we're a boutique investment management corporate advisory business. Our model is all about co-investment. So investors being funds, small caps, high net worths, simply won't get opportunities from us unless we're co-investing alongside you on the same price, same terms. And it certainly has been a difficult small cap market and the last 24 months, but we are seeing global interest rates starting to be cut, cheaper money coming through, interest rates, stimulus from potentially China. So with that, all in all, we feel that commodities are really in a strong position as we head into the final quarter of this year leading to 2025. So first, I want to welcome everyone. And our first speaker for today is John Dugdale, the CEO of Golden Deeps. John, looking forward to hearing your presentation.
So at Golden Deeps Limited, we've got a dual exploration focus on world-class terrains in the Lachlan Fold Belt, Copper Gold Province of New South Wales in Australia, as well as the Atavi Mountainland, Copper, Lead, Zinc and Vanadium District in Namibia. In New South Wales, we've got a potential new copper, zinc and gold discovery in the eastern part of the Lachlan Fold Belt. We've identified a large geochemical and geophysical footprint. We've got multiple porphyry volcanics hosted sulfide targets, and we've got diamond drilling in progress. We haven't released any results of that drilling as yet, but we're testing under greater than 1% copper with zinc and gold anomalies and multiple geophysical targets. So we've basically got the mineralisation outcropping at surface, and we can see in the geophysics that we're onto something pretty big. In the Atavi Mountain Belt of Namibia, we've got advanced resource and new discovery projects with previous high-grade production of vanadium, copper, lead, zinc and silver and other things, just about everything in the periodic table, including antimony, Niv. Abinab Mine, previously the highest grade vanadium producer in the world. We've got near-term potential there for vanadium plus lead, zinc and copper production in concentrate. At Nosib, we've got a copper, vanadium, lead, silver discovery, again with near-term production potential of that vanadium-rich mineral, but also deeper, thick strata-bound copper silver sulfide mineralisation, which is over 40 metres thick, and we've only tested it down to about 100 metres. At Coosup Springs, a very rich historical mine, 300,000 tonnes of 10% copper and 584 grams per tonne silver produced, and we've identified extensions at depth of diamond drilling. Again, we're only just getting onto that, and we've got more work to do. So Golden Deeps, a number of advanced critical elements projects. We've identified mineralisation in world-class terrains, and all that trading within a less than $4 million cash backing. So we're really there's no value ascribed to all these wonderful projects. Next slide, please. So this is our New South Wales project. We've got a major tenement holding across the Rockley Goolgong Belt, which is the eastern of 4 volcanic belts in New South Wales. All of the others host world-class deposits, and the geology of our belt doesn't look any different. It's just a little bit less exposed. That eastern picture, the right-hand side picture, shows our extensive geochemical anomalies over a 2 kilometre by 2 kilometre area. with plus 1% copper rock chips and zinc and gold. Big geophysical footprint, IP anomalies, magnetic features, and so forth. We're drilling right into the guts of those outcropping zones as we speak, with results to come. We've also got other targets we're developing on that property. We've got a big new joint venture area to the north and south, and we've got high-grade gold targets at our Tuckers Hill project to the west, which are along strike from the Hill End gold field, which has produced 2 million ounces historically. Next slide, please. So quick snapshot again of the projects in Namibia. This really is world-class terrain. The Tsumeb mine historically produced 30 million tonnes at 4.3% copper, 10% lead, 3.5% zinc. We've got the same geology. I mentioned Abinab. We've been able to show that we've got the potential to produce a 15% vanadium, 11% zinc, 38% lead concentrate. So much higher grade concentrate that can be produced from other vanadium projects. Nosib, I mentioned before, we've got the vanadium mineralisation with the copper, lead and silver at near surface. So that can be coupled with Abinab for near-term production, but also extensions of depth. We've already got a resource of over 3 million tonnes at about 1.1% V2O5 equivalent. Then we've got, in addition to Nosib, the Kusub Springs copper silver with antimony discovery that we've got extensions at depth there. So we're really only just scratching the surface in terms of our near-term production potential. We've got longer-term potential to really grow a major sulfide resource as well as the near-term production. Thank you very much.
John, great presentation. I might kick off, and for those listening, please use your Q&A if you've got any questions for John or any other of the panelists. I mean, you're currently trading below cash backing, so your market cap is lower than your cash on hand with a portfolio of assets, and you're drilling. I mean, why do you think the market is just not reflecting the value in a stock?
Essentially, we've spent a lot of time setting up these projects, and it's only now, for instance, in the Lachlan Fold Belt project that we're actually drilling it. So I think the upside is now going to come through into the company. We haven't been all that upset about that. We've just been getting on with our work, but now the drills are rolling and we're drilling into mineralized structures. So we've done a bit of that previously in Namibia, and there's been a bit of a break in that work as well, but that'll pretty well roll straight on after this initial phase of work in the LFB. So essentially, we've drifted like everybody else, but the good thing is we've still got cash in the bank and the drills are rolling.
Very good. And probably one more question for me before we jump into our next presenter is, you talked about antimony. What's the significance of it all? I mean, obviously, China's just recently banned the metal from exports. I mean, the price of some of the stocks have really picked up. Is it a phenomenal or is it here to stay?
I think with a number of these types of elements, and we've got quite a few of them in our projects in Namibia, we saw the same thing with germanium and gallium, and we've got some of that. Antimony is another one. So I think one of the beauties of a project like the ones we've got in Namibia is that they're truly polymetallic, and so you can virtually just about find everything. So whether there's a shortage or whether there's market fundamentals that stick around in these commodities, we don't really mind, because we've got all sorts of things that we can produce from these types of systems.
Thanks, John. Sorry, Niv. Any of our investors have any questions? We've got another couple of minutes before we move on to the next one.
I'll jump into the question there, Niv. G'day, John. Look, I thought, obviously you're focusing at the moment on New South Wales. Just interested to know, you've gone straight to diamond drilling, which is great. You obviously got the permits to drill. Any previous drill results on these targets? Not
in the target areas that we've defined. There was a little bit of drilling under some workings on the eastern side of that project. There's an old gold mine there. One of the interesting things about this part of the world is that the exploration hasn't really gone much beyond, stream sediment sampling and a bit of regional geophysics. So it's quite remarkable how these targets that we've defined are essentially outcropping chalcopyrite in some cases. So no drilling into the targets that we're working on, and they're sticking out of the ground. Quite remarkable.
I had a question there. John, you've been exploring and running programs in some pretty interesting places around the world from memory. Can you give us a flavour of what it's like and the jurisdiction in Namibia and how you're getting on there and who you use and that type of thing?
So Namibia is actually a really good good jurisdiction. Everything's fairly stable. It's out in the middle of the desert, or it's not quite desert where we are, but it might as well be. There's quite a bit of infrastructure, believe it or not, good roads and power. And it's a place where mining's been done before, and the prospects for employment are very welcome. There's other mines in the area as well. And it's quite cheap to operate. I reckon drilling costs are probably 50% of what they are in Australia, and permitting is very straightforward for exploration. So it's, people describe it as Africa for beginners, but I think it's actually got some advantages over operating in Australia these days, particularly compared to somewhere like central New South Wales or central Victoria, for instance.
Hi, John. Just a quick query, really. You've got a pretty broad portfolio right across the spectrum there. Very broad, I would have thought. But, from an optionality perspective, I guess that's good. At this part of the cycle, are you seeing any interest in potential farming deals across some of those assets to both speed up and to get some certainty rather than sort of do them all in series?
I think,
you're going to need more money, right? $4 million won't get across that portfolio very far.
Well, I think the way I've tended to approach exploration and discovery in the past is to zero in as much as possible using the geophysics and geochemistry, etc., and our understanding of the geology before we drill the discovery hole. So this program in New South Wales is 4 holes, and I've been associated with other discoveries where, there's a lot of money spent after the discovery, but to get there can be done fairly efficiently, and that's why we're doing diamond drilling as well. Now, I think there will be some interest if we can get onto something in that stuff in New South Wales. There's other companies obviously hunting around like Alderan and others. So I would expect some expressions of interest if we can hit what we expect to hit in those structures. Namibia is probably a little bit of another case, although there are operators there, such as a Chinese group that's taken on the Tsumeb smelter, that might be interested in partnerships where they had put money in and we'd keep exploring. So we're always open to those sort of things, but the biggest problem which I expect to have is that we'll have too many ore bodies to explore, and we'll have to share the risk.
A nice problem to have.
We might move to our next presenter, just conscious of time. So Corey Nolan, Managing Director of Platina Resources. Corey, it's really nice to see you. Looking forward to presentation.
Thanks very much for the introduction, Niv, and welcome everybody to the presentation. If we can get the first slide up, please. No, that's the one. Thank you. So Platina Resources is a 13 million market cap West Australian focused gold exploration company. Our strategy is to create shareholder value through discovery success. We're extremely well funded. We've got $30 million of cash in the bank. We've got no debt, and we've actually got the potential to receive another $4.5 million in milestone payments relating to the sale of our Scandium project more than a year ago. So at our current 2-cent price, a little bit like John's company, we're effectively trading at a 0 to a low enterprise value, meaning that shareholders can get exposure to all our gold projects for free. We're very much focused on exploring in Western Australia. We think it's a leading and attractive mining jurisdiction with the potential for tier 1 discoveries. And I think there's a really good example of discovery success just recently with Spartan. They've discovered this Never Never deposit. It was right under their noses. It was in a company that's been broke twice, and the success of that, the drilling into that deposit has catapulted that company up to a $1.5 billion market cap. So just goes to show that there are fantastic opportunities around in WA. It's also just worth noting that WA, it's got world-class infrastructure, excellent and sophisticated drilling and exploration capabilities. You've got the ability to toll treat ore. There's plenty of plants available, and probably we're starting to see quite a bit of corporate appeal coming into the West Australian gold sector. There's a number of companies doing mergers and acquisitions at the moment. Next slide, please. So Platina's run by myself. I raise all the money for the company, and Rowan Deshpand, our exploration manager, he spends it all. But I have over 30 years experience in the resources industry, about half of that working with junior companies. I've been at Platina for nearly 6 years and taken the company through a fairly big restructure. We divested all of our platinum assets, and we've realised nearly $20 million in cash, and that's left us really well positioned to pursue our new gold strategy in WA. Prior to joining Platina, I was the CEO of Sayona Mining, and I was instrumental in establishing our lithium footprint in Canada. And after I left the company, it went on to become a $2.5 billion company. Rowan Deshpand, he joined Platina from De Grey Mining. He was part of the discovery team on the Hemi deposit, which has grown into an 11 million ounce ore body. So, and he's got an extensive working experience in Western Australia. So we're both pretty focused and committed to try and have success again, and prove that our first two successes weren't flukes. Next slide, please. So our projects are all located in the Yilgarn Craton and in the Ashburton regions of WA. They're areas where we believe that there's the potential to have 1 million ounce gold endowment plus. During 2024, we've been primarily focused on working on 3 projects. We've got our Xanadu project in the Ashburton. We've done a number of drilling programs up there, and you can see on the screen, we've had some pretty impressive drill results in that system there. We're looking to go back and do some deeper drilling, diamond drilling, later this in the fourth quarter this year. And we've recently also just completed a large rock chipping and mapping program at our Hermes prospect that we discovered last year. And we're hoping that we'll get some good results back from there that we can use for further drilling as well. We also just completed a big air core program, 6,500 meters at our Beatty project south of Norseman. We've demonstrated that the Norseman gold belt runs into the tenement undercover, and we've got to do some follow-up drilling there later in the year once we've completed some further geophysics work. And also we have extensively drilled our Brimstone project. We've got some pretty stellar intersections out of that. And we're currently looking at a number of different options on how we might monetize that project. And we'll announce those to the market in due course. So the rest of the year should be generate a lot of good news flow. So just in summary, Platina, extremely well funded, very low enterprise value, team motivated for success, developing a portfolio targeting 1 million ounce gold deposits in a sector that's in a gold environment that's running red hot. So thank you for listening.
Corey, great presentation, and just want to highlight how important is the background of the people that you work with, the exploration team, the management team, the board, into making something a success.
Oh, look, it's pretty fundamental. Rowan's really going to be really critical to our success. He got a lot of experience early in his career working with the De Grey team. There's a lot of super experienced geologists working there, and so we're obviously just looking to replicate that experience across our other exploration projects. And we're well supported by a good board with a good depth of commercial and development experience. So you've got that backdrop to the projects that you're always looking at.
Yeah, Any questions from John or Richard or Cam?
Can I kick off? Corey, congratulations on monetising the Scandium asset. That's, was a fantastic deal. So I've got two questions. One, just about the budget, obviously sitting on a nice cash pile there. How are you going to make it last or spend it? And the other things, what are the, really interesting, that Ashburton area. We've seen Kalamazoo, potentially selling Mount Olympus to De Grey. Is that the deposit style you're targeting?
Yeah, g'day, John. Thanks for your questions. Appreciate that. So look, we run a very lean show. We don't have any big offices. We all, our team effectively works from home. So we're trying to maximise getting every dollar we can into the ground. We've been pretty smart about the way we're trying to do this. We're trying to do as many of the early stage activities that you go through when you identify an exploration project. Little drill campaigns, keep them short and sweet. Try and get some results to justify going back. So, yeah, look, we'll keep just investing the money as prudently as we can from a budget perspective. It's really interesting the De Grey situation at the Ashburton project. We've got a lot of drilling in our project there. We believe that we could have a reasonable sized oxide resource there, but unfortunately quite a lot of our historical drilling that we inherited isn't JORC compliant, so we're not in a position to sort of be able to announce a resource there. But we would obviously be hopeful that if De Grey do exercise that option and look to put a plant at the Ashburton project, then we might have an option to monetize some of our resources through that facility.
Corey, Richard Morrow here. Thanks for your presentation, mate. That's very, very good. Now your exploration projects are like your children. You're not meant to have a favourite, but come on, which one there is your and Rowan's favourite? And the second question there is how did you pick them up?
Yeah, look, so obviously it's hard to answer your first question, but I'd probably point to our Xanadu project. If you were to actually look at our more detailed investor presentation online, we did a lot of detailed geophysics, looking for what we think could be the source of the gold mineralization in that system. It's got a strike length of over 10 Ks, and you would have seen from some of the drill intersections that we get zones of up to 55 meters going, anywhere from 0.5 up to sort of 1 gram, and within that you get these structural zones where you get narrower widths but very high grade mineralization. So we've done a big campaign of geophysics, and we're planning to do some diamond holes and test those targets later in the year. Sorry, the second question.
Yeah, how did you pick them up?
Oh, yeah, so we have picked up most of our tenements through deals with prospectors or vendors, and we've got a couple of tenements that we've picked up ourselves. We picked up our Mount Nair tenement, and we joint ventured that out to Chalice Mining, for example, and most of our other tenements through acquisition.
Corey, excellent presentation. If anyone's got more questions for Corey, please feel free to reach out directly to him. A third presenter, Michael Fotios, welcome, CEO of Scorpion Minerals. Michael, I know we caught up in our office or just down the bottom of the floor and talking about the lithium market. So we're really interested, obviously, hearing more about you and your projects.
Thanks, Niv, and thanks for everybody for attending this afternoon. I'm going to chat to you today, obviously, about Scorpion Minerals. We have been focused on two projects. I'm largely going to stick to the Northern Murchison today, but we have Pharos and the You and Me project in our portfolio. You and Me is an advanced lithium play that we've drilled up to a target. We've established an exploration target of between 7.5 and 13.5 million tonnes at 1% lithium. And we're currently in discussions with potential strategic partners with respect to what we're doing in the lithium space, and I'm happy to talk about that after the core of the presentation. At the northern end of the Murchison, which is really where Scorpion has been for the last decade, we've been aggregating a ground position just to the west of the Big Bell Dalgaranga shear corridor. You can see that on that plan in the slide. We have a large, almost 1,000 square kilometre position there. We started about a decade ago acquiring the Mount Mulcahy Archean VMS copper deposit. We drilled that up many years ago. There's a modest resource there of around 650,000 tonnes at 2.5% copper, 1.8% zinc, and some cobalt, silver, and gold credits. And we think that's a very prospective VMS target. We then added a number of gold tenements and explored those. And it's about 2.5 years ago now that we started doing the gold exploration. And in the last year or so, we've aggregated a bunch of ground looking at lithium targets in this region. So we're it's a very well-developed infrastructure-wise region. As you're all probably aware, there had been this significant new discovery at Dalgaranga in a similar sort of structural position to our tenement holding in the Murchison. As Corey said, this is a very prospective province. It's produced 30 to 40 million ounces of gold. Spartan's Never Never discovery, which was literally hundreds of metres away, or not even hundreds of metres away from an existing mine, has been a very significant discovery. It's looking like it's going to be 2 million ounces plus at a very good grade. And that was really originally why we started aggregating gold ground in this terrain. The area to the west of the Big Bell linear is particularly unexplored. I've been exploring in this belt since the early 80s with companies like Homestake and Sons of Gwalia in a number of these areas. And this particular area attracted us because the historic exploration has been relatively low. So I think we'll go on to the next slide, please. This is just a diagram zooming in on our tenements. It's showing the various commodity domains, that we've currently identified within the tenements. There are multiple gold targets been identified. These are all sitting on what we think are northwest structural splays off the Big Bell linear. Similar kinds of structures control many other deposits in the Murchison belt. And, over the many years that we've been exploring here, we've developed a sort of understanding of the distribution and possibly what locates these deposits. So this has been the reason for picking up a lot of these tenements. The underlying stratigraphy is particularly prospective. We have several targets within the gold areas. As I mentioned earlier, the Mount Mulcahy copper prospect sits on the eastern side of our tenement package. There's 13.5 kilometre long target zone there, prospective for VMS copper targets or repetitions of the existing mineralisation. There's 20 undrilled EM targets along that stratigraphy, and we're very keen to advance that target as well. And then, of course, the lithium corridor through the Puna targets runs around the granite contact at the southern end of the project area, and we're very early days here in evaluating the distribution of the LCT pegmatites in this corridor and potential for further lithium discovery. So we're very fortunate with this project that within the one project, we have exposure to a number of different commodities. There's some significant mineralisation been identified as far as the gold and the copper and the lithium concerned, and this is an area that we, along with you and me, we have focused on. So we're pretty focused, our efforts in this particular area. Now go to the next slide, please. This is just a bit of detail now about the gold targets. We picked up a bunch of tenements here that were prospective for gold about 3 or 4 years ago. We aggregated all of the historic data that we could get our hands on. That was mapping, geochemistry, drilling. We purchased a large aeromagnetic data set, and we had all of the air magnetics reprocessed so we could interpret the structures and the controlling features on the gold mineralization. And what we found was that there had been a number of very significant historic drill targets established. In our view, based on the interpretations historically, they weren't drilled optimally. We don't think that the previous drilling has really targeted the primary structures that are mineralised, but nonetheless, there's been some significant results. You can see there at places like Oliver's patch, we've got 16 metres at 3, 7 metres at 8 grams, 5 metres at 8 at one end of it. But these are relatively wide space programs, as is the Ulysses, the Mustang Sally and the Laterite Hill targets. We have a number of gold targets around the Mount Mulcahy syncline, which are unrelated to the copper VMS, but are in structural positions that we believe are standalone gold targets. So we're working our way through all of this data. We're coming up with an exploration plan and model. We'll be publishing some information on this soon. What we want to try and do here is a more systematic approach, looking at the geology, expanding the geochemistry into a more systematic level playing field. There's been a dozen or so different operators here historically. They've all used different techniques. They've all used different analytical processes. And, we're trying to sort of standardise the way we're going about exploring this area. So we've got a mixture of advanced targets that we can go and drill, and large areas where we'll complete geochemistry to identify new targets adjacent to these structures coming off the Big Bell Shear. So that's really the summary of where we're at. We're very bullish about this ground position. We're very encouraged by the work at Spartan. I'm particularly, have a bit of pride there because they're some of our old Northern Star alumni that are now running, Spartan, and they've done a terrific job. And, I think as Corey pointed out, it just shows what's still left in these regions to be discovered. I think the industry's gone a long time without, one of these 1 or 2 or 3 million ounce discoveries. And I think there's plenty more of them in the Murchison, in some of these other Archean greenstones belts where the exploration historically has been, less intense.
Michael, great presentation. Just running sort of short of time, but just kicking off. I mean, what are you most excited about out of all the projects? And just from a capital management perspective, what are you doing at the moment in a tough market?
Look, from the capital side, we're progressing the strategic partnership discussions. We think that's a way of getting ourselves funded. We've put a lot of effort in the last few years into lithium. Happy to answer some questions on that specifically if there are any. What I like the most at the moment, well, look, I like the lithium market. I think it will improve, but I think it's going to take a little bit of time. I'm really a gold, most of my career has been in gold and rare metals. Obviously, I'm a bit of a gold bull, and I really enjoy the gold exploration. I've spent many years, looking at these sorts of terrains. But I'm also confident in the copper. So look, for me right now, we're going to be pushing the gold pretty hard. We're going to think long and hard about what to do with Mount Mulcahy. Deep drilling for VMS targets and conductors is an expensive business. And, one consideration is, can we find some partners? And we have had groups approach us to farm into things like Mount Mulcahy in the past.
Michael, thanks very much. And if there's any more further questions, please direct them to us or to Michael. Next, we're going to have a bit of a quick panel with John, Cam and Richard. Finally got a few minutes, guys. So just want to throw it out there. Firstly, to John, Forwood from Lowell. I mean, what are you seeing in the market? How are you positioning your portfolio?
Oh, look, thanks, Niv. Look, I think, the 3 presentations we've had already tonight sort of exemplify it, that, the market is very tough, as you've alluded to. And some of these, really interesting looking companies trading at, almost zero or less than zero EVs. So, look, huge opportunities there, across the board. I think right now the sun is shining on the gold side of things. So that is what's sort of attracting the attention. But look, if you can be counter-cyclical, then looking at things that have really been beaten up, like say nickel or lithium, hopefully they will be coming back and yielding some attractive shareholder returns.
And Cam, just over to you. I mean, what are you seeing on the M&A side? I know you do a lot of project origination and M&A. I mean, where are you at? What are you seeing, especially in sort of the market? It's interesting what John pointed out, looking at nickel and looking at sort of the unloved metals and finding value. What are you seeing yourself?
We're seeing a lot of flux, to be completely honest, at the bottom of the cycle. There's a lot of humming and hawing and which direction should people go. I mean, we've been long gold 6 or 7 years in both projects and production, and that's been great for us. But I am starting to see a few green shoots come out of the UK market on the basis that, a lot of these people think that they may have missed the bottom, potentially. Seeing a lot more interest now coming in from the US, who are, convinced that gold's going to go to 5,000, so is everything else, and critical minerals has all of a sudden got on the radar after 25 years. So I think there will be some significant action probably early next year, I would have thought. There's a lot of companies talking to a lot of companies, looking for backing on, sort of corporate movements. And I think there's plenty of room for that. And I think, the bulk up strategy, even at this early stage, is probably a good thing, because it allows investors to get a bit more money to work on a larger, you could say lower risk project. They're all high risk projects. But we're seeing a lot of optimization going on in existing projects, early stage projects, pulling PEAs apart, going back and optimizing the production chain, and looking at things like NPVs and getting good increases, and just spending a bit of time on qualifying their projects and their resources, which is pretty interesting.
And Richard, at Ords, what are you talking to clients about? What's the feel of the retail investors and the institutions? Are you seeing more inflows, or are people still very careful and cautious?
Yes, unusually so. Tell you what, most people are looking at is how much money these gold companies are making. I mean, the margins with Aussie dollar gold price at 3,700 are just astronomical, and we're just right in the middle of the reporting season, and you can see this sort of this cash sort of flowing down into balance sheets, and the trouble is it's getting stuck there. So what we're tending to see here is that, and recommend, is that the clients just go out for a little bit more risk, have a look at gold companies that have got stranded ounces in the ground, particularly if they're very close to a hungry mill that's not quite full at the moment, and at sometime in the very near future, this money that's building up in the balance sheets is going to burn a hole in a few companies' pockets. And it's quite interesting to hear Michael talk about funding options to look at. It may not be just straight takeovers we see. Certainly there's more opportunities there for joint ventures, and the sort of big brother investment approach from the actual gold producers that gives the next leg of discovery out there in WA.
I think, Richard, you've also got to look at the cost structures as well, because they're going through the roof. I just got back just quickly, Niv. I just got back from the gold conference in Sydney, and it was definitely a better feeling this year than last. So it'd be really interesting to see what IMARC turns up, what the feeling at IMARC is going to be, whether there's a general uplift across the board. So that'll be a really good indicator.
Thanks very much, guys. Pat Williams, Managing Director of Revolver Resources. Pat, I know we are looking forward to hearing from you, especially on the copper story in Queensland. So over to you.
Niv, thank you very much. And ladies and gentlemen, it's a very great pleasure to have the time with you this afternoon. I always welcome the opportunity to speak about Revolver and how we're moving and migrating the business as we move forward. So what we have today really is the essence of what I call a great mustard seed story. From little things, big things grow. So building a copper business one step at a time. Please move on, next slide. Here we go. So Revolver exists as basically a two-project company, both well-advanced copper exploration. However, the difference with the Diane project is its dual nature. It has mining leases from a 1980s historic mining operation, and for those that don't know, the Diane project was, and still is, Australia's highest grade producing ever copper operation. So we've got what remains there. And in the industry at the moment, everyone's commented on it. I'm not adding any new disclosure there. It's tough going for explorers. So what we're doing is capitalizing on the benefit of the diversification of our assets. So next slide, please. Again, next slide, thank you. So what we're doing is taking a break from the conventional orthodoxy of exploration. At the Diane project, as I said, we have remaining mining leases. We have quantified a very small at-surface ore body. So what we've taken now for more than 12 months, given the state of the market, is a headlong approach to actually commercialise the at-surface copper deposit. So we're 12 months into that. Very early next year, we're on track for commissioning a small on-site SX-EW plant, and by mid next year, certainly producing our own copper cathode. So we've taken that diversification step. We have an asset capable of production. It's very favourable geology. It's outcropping at surface. It's a low risk project from any of the metrics that people would standardly compare. Very capital light, a very small cost to get this thing into production with proven technology, SX-EW, on-site leaching with a very leach amenable ore. They're all the hallmark ingredients for a great cash flow. Now, it's a small project, not denying that. And as I said, from little things, big things grow. We're taking the opportunity over a 4 or 5 year period to develop a significant cash flow for this business. So it's not rocket science. Do the numbers. We've published the resource, 18,000 tonnes, current copper price, even with a little bit of an uptick. And with the nature of the ore body and the nature of the processing, we'll kind of be doing this at 100% margin. So it's a very, very, very generous, healthy cash flow. So what we see at Revolver is the opportunity to fund our future. Substantially, it'll be the best capital raise that we do. And we're looking forward to what it brings, because on our projects, and if we can advance to the next slide, please. What we've been busy doing since we listed in late 2021 is hurriedly exploring the region around Diane and our other project in the Mount Isa block. What we're stopping to do and what we're trying to portray here is step one is the near-term copper production, get some money, get some substantial money into the business, self-funded, very shareholder-friendly. Step two, we've already established that we have substantial prospectivity underneath the deposit. With the nature of what the Diane ore body was, it's not a unicorn, okay? Where there's one, there's more. And we have established, but we haven't thoroughly prosecuted what remains below. It's a really exciting potential. And given that we've got facilities on site, copper production capability, and our own healthy cash flow, all we lack is the resources to get in and properly test out what lies beneath. And a step beyond that, next slide, please. What we've also been spending a lot of time and effort doing is gathering the base data across what is effectively a 500 square kilometre region. We've added tenements, we've acquired tenements, and we've established that there's a very clear pattern of prospectivity across the Diane high strain zone. Advanced airborne EM, lots of ground truthing, some scout drilling. We have got more than just sniffs of very exciting regional prospectivity that, again, we just lack the capital. It's not the market. Raise a dollar, spend a dollar. It's not the way we see there's a strategy within Revolver and using the Diane business to give ourselves a great stepping stone to going forward. So small steps, one at a time. Let's develop this project, make some great cash flow, and go and grow to prosecute the nearby and regional prospectivity at Diane. So we're excited. We're looking forward to the remainder of this year. We're well through the pre-construction activities, wrapping up the column scale leach testing, outstanding results that we're looking forward to bringing to market. And that then precipitates a very short procurement and construction process with commissioning in the first quarter next year. So exciting times for us at Revolver, and we look forward to keeping everyone updated with a very encouraging news flow coming forward. So thank you and welcome questions.
Pat, I might start. I mean, I was speaking to one of your major shareholders actually yesterday, all very exciting. I mean, how are things progressing on the funding side, financing side, and, you know, some of the things that Cam Olsen said, just consolidation, M&A, joint ventures, farm-ins. How do you see that sort of in the copper space going forward? So 2 questions.
Look, the first question, Niv, about funding. We're taking a very deliberate action step here because of the state of the market, because of the capitalisation share price of the business. We need funding to build this project. We don't want to do it with pocket change. So we're structuring a joint venture at the project level that will give, on face value, a very good, pre-cash distribution as a joint venture participant. With the study work that we've undertaken over the last 12 months, the board has advanced its comfort level with significant amounts of debt. So whether it's debt or equity, we believe, we are well advanced with project level conversations, and we're going to take the right money. I will, anecdotally relay some stories. The first 6 months of this year, we introduced the project to a number of people. They liked it so much they wanted to steal it. So, as a compliment, we take that in the best possible light. But we're not going to do deals that give away this nugget of really outstanding value. We've got a lot of compliments. When people look under the hood, they realise what we've got. It's unorthodox. I'm the first to acknowledge that. We're taking a different approach to fund the business. We have the capability. It's my background. We have the board and management capability to deliver this project in a very low risk, cost managed way, develop some great cash. Our conversations need another 4 to 6 weeks to wrap up the right capital or the right funding mix. And we're excited. We think we've got a great future in that. Your second question about partnerships and arrangements, there's a big pie there, and we're more than happy to sell it, share it with anyone that wants to come along on fair and equitable grounds. Absolutely. So open to those opportunities, both on the mine progress, the copper production, or even the regional prospectivity. All calls taken with great delight.
Any further questions from Cam or John?
Richard? I think it's a great strategy. It's terrific to see that, and you've got the opportunity to do that. And I would have thought I'd probably speak on behalf of John and Richard as well. Given that you're outside of Cairns and it's been the coldest Melbourne winter in a decade, you should do a roadshow down Melbourne. You might get some interest. They'll only visit you in winter.
Yeah, absolutely. Look, I take your
Well done. No, I think it's terrific. It's good to see you moving forward, and I think you'll get support for that.
thank you. Yep.
Pat, in terms of seasonality and wet season up there, just picking up on Cam's point about the weather, is there any sort of interruption to operations during the wet?
Look, John, when you take a chance to look under the hood here, it's really it's a processing project. Yeah, it's one digger, 3 trucks. Will actually mine the entire ore body in 16 months. So it's really protecting the leach pads. It's all about water management. We're subtropical, so we're not coastal. We're well enough inland where we kind of get a metre of rain a year, not 4.5. So when you sit down and look at it, and we're high and dry, so we're perched up on top of high rocky ridges. The rain comes, it hits the ground, it runs off. Without being, we need to manage water on site because of environmental site water management requirements. But in terms of risk to the impact of both mining and processing, they're kind of low on the spectrum because of the dynamics of the site and where we sit. So we've, crazily enough, I've been the bunny on site, whether it's drill availability or seasonality. We've actually done all of our resource drilling starting in October, running through to March for the last 3 years. So we certainly know what it's like to work in that part of the world in the wet. So we've got a handle of it. And really, I underscore the reality again that it's a 4-year project. It's a smash and grab. And if you do those numbers on the back of an envelope, you'll kind of, your jaw will hit the ground on the potential earning there. So, we certainly believe we've got in our mind's eye the risks that we need to manage and a mitigation process to keep them in check.
Thanks very much. That was excellent. And apologies for running short. Our final presenter is Scott Caithness, Managing Director of Alderan Resources. Scott, we're obviously major shareholders and big supporters, so looking forward to getting an update. You did come out with the kicking off drilling for your copper asset in the US, so looking forward to hearing about that. And welcome, Scott.
Thanks very much, Niv, and thanks everyone for hanging around for the last presentation. As Niv mentioned, Alderan is exploring for copper and gold in the US. We also have a portfolio of lithium projects. We're a little bit earlier stage in Brazil. But what I'm going to be talking about is the Caithness copper gold project, which is in southwestern Utah in the US. So just a little bit of history on Caithness. It's an old copper and gold mining district. It was mined, Caithness itself was mined up until about 1919, produced about 1.3 million tonnes at about 2% copper and 0.3 grams per tonne gold. So the Caithness mine sits in a belt that's about 1.2 kilometres long. The Comet deposit was a gold-rich deposit, much smaller than Caithness. Caithness is the only deposit in the belt that where there is a production history. So there's been quite a lot of exploration done at Caithness post-mining. Most of that's been done from about 1959, with the most recent drilling in 2021. And look, I've put down some of the intersections, the drill intersections there. 5 meters at 6.7%, within 43 at 1.7, 12 meters at 3, a number of plus 1.5% copper intersections throughout. The most recent hole, the project was farmed out to Rio Tinto for a few years to explore for porphyry coppers, very large-scale porphyries. Alderan's target is medium tonnage and higher grade copper. But Rio drilled a hole into the Caithness deposit. The last intersection there, 41 meters at 1.9 copper and 0.62 gold, was one of the Rio holes that they drilled. So what we've done is we got the project back off Rio in the second half of last year. I joined Alderan in 2021. It was already farmed out to Rio at that point. So these targets
interested me right from the word go. They weren't Rio Tinto targets. So what we've done is we've gone back, we've done 3D deposit modeling on the old Cactus and Comet deposits. We've remodeled the Rio Tinto drone magnetics, very high quality drone magnetics for the district. And we've also done a soil sampling program. The critical thing that came out of the modeling was it highlighted this is the deposit modeling. It highlighted that Cactus and Comet were still open at depth, and Cactus was open to the northwest. But it also highlighted the New Year's target, which is about 500 meters, 400 or 500 meters along a northwest trending structure from Cactus. New Year's was drilled in the early 1960s, 1964. It had intersections in it up to 14 meters at 2.3% copper, within 20 meters at about 1.7. Other intersections from surface, 11 meters at 1.5, within 27 meters at 0.85 from surface. And there was another hole that was drilled in 2002. Newmont had the project for a little while, and they drilled 2 holes into the district. One of them was between Cactus and New Year's. It was a 42.7 meter deep hole, and it basically intersected 0.8% copper from surface, according to the log, all oxide. And that included 2 zones, one of 11 meters at 1.6 and one of nearly 5 meters at 1.3. So very good historical grades. New Year's hasn't been drilled since 1964, so nobody's really touched it since then. We go to the next slide. After we did the modeling, what we wanted to see was whether Cactus and Comet had a particular signature. Obviously, we went back to the Rio Tinto drone magnetics. We reprocessed it up from the point of view of looking at Cactus and Comet, whether there's something unique about them and whether there were targets similar to there. So the image on the left-hand side is total magnetic intensity. I've got Cactus and Comet marked. You can see that they sit in a magnetic low corridor, which is the blue zone. That corridor trends northwest, southeast, straight up into the New Year's prospect. And you can see that there's another mag low sitting at New Year's. If you actually extend it beyond that box I've got, which is the enlargement area, you can actually see that magnetic low trend even going out the other end of that box. So it's quite an extensive, and it's known as the Cactus Canyon Fault Zone. We always sort of knew that Cactus and Comet sat within that, but the intriguing thing about putting this together is you can see that there are a number of other parallel, sub-parallel magnetic low features that I believe pick up structures. And then what we did was we did 3D inversion modeling of the magnetics. On the right-hand side, you can see the 3D inversion image. You can see that Cactus has a discrete magnetic low anomaly sitting over the top of the deposit. You can see that Comet, which is smaller deposit, more gold rich, also has a discrete magnetic anomaly. And then you start looking at the image, and I've circled them. You can see that there's at least another 12 very, very similar magnetic anomalies to Cactus and Comet, of which New Year's is one. And you can see the scale of some of them is significantly larger than the Cactus deposit. Our modeling at Cactus indicated that there's a lot more mineralization left behind than what was mined historically as well. So, you know, potentially a lot more there than what's been taken out in the past. Next slide, please. So where we're at this particular point, right? We've got Cactus and Comet sit in the same northwest trending structure, along with the New Year's prospect. We've got deposits that have coincident magnetic anomalies over about 1.2 kilometers of strike, all sitting within that structure. We've got high-grade copper drill intersections at Cactus and Comet, but also at New Year's. And we've got mineralization from surface, some of which is logged in the old logging as oxide. The holes from 1964, we don't have logs of those. We've got assays, but we don't have logs. New Year's, there has been some rock chip sampling done at New Year's, dating back to about 2015, 2016, up to 4.5% in rock chip samples. The picture that I had on the front page, the opening page, is some of the tourmaline breccia with azurite and malachite through it.
one of the things we did, one of the things that was the dogma within a lot of the conversations on this area is soil sampling wouldn't work. The soils are poorly developed. I actually found some soil geochem from a company called Rosario back in the early 1960s. I actually image processed that up and I thought it was showing something. So we did a soil sample grid a few months ago over the top of the New Year's prospect and the bigger New Year's magnetic anomaly. We got grades up to 0.33% using PXRF, sitting over the top of the New Year's target and an anomaly that's about 400 meters by 300 meters. But there's also 3 additional anomalies that we picked up out of that soil geochem. And it's interesting because when you look at those anomalies of the soil geochem, and then you overlay that grid on the image on the right, which is the TMI magnetics again, you start to see that some of those soil anomalies sit directly above magnetic lows again. So we think we've got a really good model going forward in terms of it. We know that Cactus and Comet have it sit within a magnetic corridor, low corridor. We know that they have discrete magnetic anomalies. Obviously, they've got a geochem signature because they've been mined in the past. New Year's is basically exactly the same. And we believe that we've got potential for at least another 12 targets sitting there. We've got the historical hole between Cactus and New Year's that intersected all oxide 42 meters from surface, and that was the entire length of the hole. So we believe that we've got potential for oxide mineralization sitting above primary mineralization. New Year's, as I mentioned, hasn't been drilled since 1964. And as Niv mentioned, we're about to start drilling. We'll be starting the program next week. So we've got an initial 3-hole program at New Year's. The first thing we're going to do is verify the old holes, bearing in mind the old holes were drilled more than 60 years ago. We're going to go back and verify those as a starting point, and then basically start to do step out and extension drilling from there. And that's just on New Year's. And then the other targets, what we'll do is we'll start using soil geochem to start prioritizing those additional targets with a view that we'll drill those going forward as well. That's where we're at. Thank you very much.
Scott, great presentations. Come off above 6, so I'll probably ask 2 questions. Copper, obviously a lot of interest there. And what got you excited to really reclaim the project back from Rio? And how big can this really get?
Look, in terms of the targets, I mean, you sort of, I believe that we're talking, multiple tens of millions of tons. I mean, you look at those anomalies. If those anomalies start to stack up, the magnetic features, I mean, New Year's is twice the size of Cactus. Cactus historically was mined at 2% grade. It was about 1.3 million tons. As I say, we believe that there's significantly more than what was mined in the past from the modelling we've done using the drill holes that have been drilled between 1959 and 2021. So many of those holes are not JORC compliant, so we can't announce a figure and a grade, but we do. I'll tell you, there's more mineralisation left. So as those drill holes indicate, so all we need is 1 or 2 of those additional targets to stack up, and we've got the potential for a significant tonnage. So, and none of those targets have been drilled, by the way. There is a scattering of old drill holes through the district, but of course, when those drill holes were done, they didn't have the same data that we've got now. So they were generally targeting things that they saw at surface. So a bit of outcropping breccia that might have had a bit of copper mineralization. So yeah, look, I'm very excited to get it back off Rio. I think that this is the right scale and a doable target for a company like Alderan.
John, Campbell, Richard, any questions for Scott?
I'll go last if you want to.
Go for it, John.
I'm happy to go first.
Go.
Yeah, look, great sounding project, Scott. Utah, pretty mining friendly jurisdiction, but interested to know in terms of your tenure, what sort of mineral ownership there is, and the deal that you've got on the project.
Yeah. Look, the tenure is a mixture of patented claims and unpatented claims. So we picked up the project from a group called Horn Silver that have all the original patented claims, and they've had it for generations, as is the US tenement system. And our Alderan surrounded that with a whole series of unpatented claims, which we've just renewed. So there's no issues with tenement, and there's no issues with our deal with Horn Silver. So that's all been progressing nicely.
Thanks.
Thanks, Scott. Any other questions from Richard or Campbell?
So we might wrap it up. So from a Peak Asset Management perspective, to Pat, John, Cam, Scott, Mike, and Richard, and obviously Kim, thanks very much. It was fantastic, and look forward to getting the recording that we can also share socially. And no, fantastic, and really looking forward to the conference. Kim, any lasting words for everyone listening?
No, absolutely. Looking forward, as it says, 5 at 5 on the road to IMARC. Looking forward to welcoming a number of these presentations at IMARC as well. We've got over 100 mining companies presenting, 9,000 delegates coming to the event. So lots of opportunities for investors amongst those. So looking forward to seeing you all there. And yeah, we've got another 5 at 5 with a number of presentations coming up on the 24th of September. So it would be great to welcome a load of you back to actually see those presentations. So thanks everyone, and look forward to seeing you all then.